Here's a brutal stat. 95% of Bitcoin holders end up losing money. That means for every person flexing their Lambo on Twitter, there are 19 others crying over their Robinhood statements. Why does this happen? If Bitcoin is supposed to be digital gold, why are most people treating it like a slot machine that only eats quarters? This is not financial advice. This is education, entertainment, and hopefully the slap-in-the-face wake-up call your portfolio's been begging for. Stick with me, because I'm about to expose the 10 fatal mistakes that separate the broke from the Bitcoin rich. And the ninth one is so common, it's probably sitting in your brain right now, ready to sabotage you. Mistake 1. Trying to time the bottom. Everyone dreams of buying Bitcoin at its lowest point, like scooping up the dip at $3,000 in 2018 or $16,000 in 2022. But here's the truth. Bottoms are only obvious after they happen. By the time the news says Bitcoin hit a new low, it's already bouncing. Most people wait for confirmation, then miss the opportunity entirely. It's like showing up to a Black Friday sale at 10 a.m. Everything good is gone, and you're stuck fighting over the off-brand toaster. In March 2020, during the pandemic crash, Bitcoin dipped under $5,000. Everyone said it's going to $1,000. Guess what? 2 years later, it hit $69,000. If you were waiting for $1,000, congrats. You waited yourself out of life-changing money. Stop trying to nail the bottom. Build a habit of dollar-cost averaging, DCA. Buy small, consistent amounts, rain or shine. You'll never perfectly time the market, but you also won't be the guy telling his grandkids, I almost bought Bitcoin at $5,000. And if you think catching the bottom is tough, just wait until you try predicting the top. Mistake 2. Trying to time the top. The flip side of FOMO is greed. People swear they'll sell at the peak, pocket cash, and then buy back in cheaper. In theory, sounds genius. In practice, total disaster. Tons of investors sold at $20,000 in 2017, patting themselves on the back, only to watch Bitcoin run to $69,000 4 years later. They told themselves, I'll buy back when it dips. Problem is, it never dipped low enough for them to feel comfortable. They missed the run entirely. Markets move fast. Peaks often last days, sometimes hours. By the time you think, this is the top, it's already gone. Trying to time the top is like leaving a party at 9 p.m. because you think it's over. Then you find out Beyoncé showed up at 9:30, handed out free Teslas, and you missed it. Have an exit plan with clear goals, like cashing out a small percentage at each milestone. $40,000, $50,000, $60,000. Don't aim for perfection, aim for discipline. But even if you avoid timing mistakes, there's one obsession that will wreck your perspective, and it's staring at you from your phone screen every day. Mistake 3. Obsessing over dollar price. Here's the rookie mistake. Only thinking about Bitcoin in dollars. The US dollar loses value every single year. $1 today buys you less gas, less groceries, and less Chipotle guac than it did 5 years ago. So why measure Bitcoin, the hardest money ever created, against soft money that's designed to inflate? Imagine you bought one Bitcoin in 2017 for $3,000. In 2021, it hit $69,000. In dollars, you're rich. But here's the trick. If you spent that Bitcoin on a Tesla in 2021, today that Tesla is worth half. Meanwhile, Bitcoin is still worth way more sats than when you started. Checking Bitcoin's dollar value daily is like weighing yourself on a broken scale. You're obsessing over the wrong metric. The question isn't, how many dollars is it worth today? The real question is, do I own more Bitcoin today than I did last week? Train your brain to think in sats. Stack consistently, ignore the daily dollar drama, and zoom out. But stacking sats won't save you if you leave them in the crypto world's most dangerous vault, the exchange. Mistake 4. Keeping coins on exchanges. FTX, Celsius, BlockFi, Mt. Gox. The crypto graveyard is filled with exchanges that looked safe until they weren't. Every time, thousands of people lost everything overnight because they trusted someone else to hold their money. FTX customers are still waiting years later to get pennies back on the dollar. Billions of Bitcoin gone. The slogan should have been, "Not your keys, not your coins." Oh, and by the way, Sam just bought a Bahamian penthouse with your funds. Leaving Bitcoin on an exchange is like leaving your paycheck in your boss's car. Sure, it's there until he drives to Mexico. Move coins into cold storage wallets like Ledger or Trezor. Self-custody means you own the private keys. If you don't control the keys, you don't own the Bitcoin. You own an IOU. But even if you've got custody locked down, there's another trap waiting. The temptation to trade your way to glory. Mistake 5. Overtrading like a casino gambler. Most Bitcoin holders blow up their stack not by holding too long, but by trying to trade their way to wealth. Spoiler alert. Unless you're a pro with years of market experience, you're not trading. You're gambling. Picture this. You buy at $40,000, sell at $42,000 thinking you're a genius, then it rips to $60,000. Now you're panicking, buying back higher. Then it drops to $50,000 and you sell again. Congratulations. You just bought high, sold low, and paid fees for the privilege. Overtrading Bitcoin is like trying to win at a Vegas blackjack table after 6 Red Bulls. You're not strategizing, you're just sweating profusely and waiting for security to escort you out. According to studies, 95% of day traders lose money. Same odds as playing roulette. Except at least with roulette, you get free drinks. Focus on long-term accumulation. Trading every dip and spike might make you feel productive, but discipline and patience build actual wealth. And while overtrading kills portfolios, another silent killer drains them slowly. Fees. Let's talk about how Wall Street and exchanges eat your lunch bite by bite. Bitcoin is supposed to make you rich, right? Well, if you're not careful, fees and Uncle Sam will make sure they get rich first. Coinbase charges up to 1.5% per transaction. Buy $10,000 worth of Bitcoin? That's $150 gone instantly. Do that 10 times a year and boom, there goes your gym membership, your Netflix, and maybe your rent. The IRS doesn't care that your HODL was part of a meme community. If you sell Bitcoin at a gain, you owe capital gains tax, up to 37% if you're flipping in under a year. They're not joking around. The IRS literally added a question on the 1040 form. Did you buy or sell crypto this year? Translation: we're watching you. Ignoring fees and taxes is like eating at a restaurant without checking the bill. Sure, you enjoyed the steak, but that $9 water bottle and $18 mandatory service fee just wrecked your wallet. Use low-fee platforms, minimize trades, and hold long enough to qualify for long-term capital gains. And keep records. TurboTax won't magically know you YOLO'd into Dogecoin last April. Speaking of YOLO, nothing destroys portfolios faster than chasing the latest shiny coin. Mistake 7. Chasing altcoins like lottery tickets. This is a classic. People buy Bitcoin, then get bored. Suddenly, some influencer is pumping Supercoin 9000, and they think, wow, why settle for 2 times when this altcoin could 100 times? In 2017, people ditched Bitcoin for BitConnect and Verge. In 2021, it was Shiba Inu, SafeMoon, and Squid Game token. Where are they now? Most are down 90 to 99%. Meanwhile, Bitcoin is still standing. Chasing altcoins is like leaving a stable relationship for someone you met on Tinder at 3 a.m. Sure, they're exciting for a week, but 6 months later, you're broke, sad, and explaining to your friends why you sold the house. Of the thousands of altcoins launched, most are dead within 5 years. It's like a crypto graveyard, except with bad branding. You can experiment with a small, fun portfolio if you want, but don't let it distract you from Bitcoin, the only coin with true decentralization, adoption, and staying power. And here's the real kicker. Even if you avoid scams, most people still sabotage themselves with the biggest mistake of all: selling too soon. Mistake 8. Selling too soon out of fear. This is the heartbreak story of Bitcoin. People buy, panic, and sell at the worst possible time. Imagine buying Bitcoin in 2015 at $300. By 2017, it hit $3,000. That's 10 times. Most people sold, thinking they won. But if they had held through the ups and downs, that same $300 coin peaked at $124,000. That's 413 times. Selling early cost them life-changing wealth. Selling Bitcoin too soon is like leaving a movie halfway through because the popcorn ran out. You miss the plot twist, the climax, and the part where everyone else is crying and clapping. Fear. Every crash feels like the end. Every dip feels like the apocalypse. But Bitcoin has died 400 plus times according to mainstream media. Yet here it is, still alive, still kicking. Have conviction. Study Bitcoin's history so you understand volatility is the price of admission. Build rules for yourself. Only sell for life-changing expenses or long-term goals, not because CNBC said Bitcoin winter. And if fear doesn't get you, boredom will. Which brings us to the next hidden wealth killer. Doing nothing when you should be stacking. Mistake 9, failing to stay consistent. Here's the sneakiest one. People buy Bitcoin once, then stop. They think, I'll wait for the perfect dip, or I'll start again when I have more money. Translation, never. If you had bought just $50 of Bitcoin every week for the last 5 years, you'd have turned about $13,000 into more than $40,000. That's without trying to time anything, just showing up. Building Bitcoin wealth is like going to the gym. Doing one push-up in January doesn't give you abs. You need consistency, even if it's small. Life gets in the way. Netflix subscriptions feel more urgent than stacking sats. But here's the truth. Small, boring, automatic actions build fortunes. Automate purchases with DCA tools. Treat Bitcoin like a bill you pay yourself. Your future self will thank you. But even if you stack consistently, there's one final mistake that can erase everything. And it's not what you think. Mistake 10. Forgetting why Bitcoin exists. Here's the ultimate mistake. Treating Bitcoin like a get-rich-quick scheme instead of what it really is. A hedge against inflation, a decentralized money system, and the hardest asset in human history. In Argentina, inflation was over 100% annually. People literally watch their savings evaporate. For them, Bitcoin isn't speculation, it's survival. Meanwhile, in the US, people sell their Bitcoin to buy NFTs of cartoon rocks. See the problem? Owning Bitcoin without understanding it is like buying a fire extinguisher and then using it as a flower vase. You miss the entire point. Study the white paper. Learn why Bitcoin was created after the 2008 financial crisis. Understand its purpose as digital gold. If you know why you hold, you won't panic sell or chase distractions. And that brings us full circle. Avoid these 10 mistakes and suddenly you're no longer in the 95% who lose. You're in the 5% who win. So there it is. The 10 fatal mistakes that drain Bitcoin fortunes. If you avoid them, you don't just hold Bitcoin. You give yourself the best shot at turning digital money into real wealth. Now, I'll leave you with this. Every Bitcoin millionaire you see today was once just some average person staring at a price chart, wondering if it was crazy to buy. The only difference? They avoided these mistakes. If you found this breakdown useful, say hello in the comments. I'd love to hear what mistake you think most people are making right now. And of course, hit subscribe if you want more no-nonsense finance breakdowns with fewer buzzwords and more punchlines. Because at the end of the day, Bitcoin doesn't care if you believe in it, but your portfolio definitely will.